Ladies and gentlemen, Bitcoin has some degree of breathing room here. I know that the market is in a very uncomfortable position right now. We have dropped down quite a lot, and there hasn't been really that much bullish price action in the last 4 months at this point, 5 months even. But we have some breathing room structurally speaking. Bitcoin is still in an upwards trend with higher highs and higher lows. We have not broken into the prior macro consolidation range. If we do so, that's when we start to see some serious issues. A drop into the $70,000 region, specifically a drop below $70,000. You can pretty much kiss your chickens goodbye at that point. The bear market would very likely begin. We'd break below pretty much everything we have if that was to occur. But it's actually a little bit more intense than that. We actually have less room than we think in a lot of ways, because although Bitcoin has breathing room right now until around 70,000, the altcoin market is dangling off the edge of a cliff big time. So the question is, how low can we actually go while remaining safe here? Not just on Bitcoin, but on altcoins right now. And should we even care about the altcoin market here? Because of course, the 4-year cycle is predicated on Bitcoin, and what happens to altcoins are kind of just an after effect. I think we should care a little bit, and I'll tell you why in this video. I'll also discuss the recent White House crypto summit, which is a bit of a non-event. Nothing really happened there. And I'll discuss the fact that unemployment came in slightly higher than expected. These things will be discussed first. I'll also discuss the Bitcoin TA in a short-term perspective and a macro perspective first, giving you context, and then we'll dive into the topic mentioned here in the introduction. So let's get into it, guys. Before we get into it today, guys, we have an exchange here that has never been hacked before in 3.5 years of being on the market. That is global non-KYC. You can sign up from anywhere in the world and use this exchange without a VPN. And furthermore, with my referral link down below, you can get a 15% trading fee discount attached to your account for life, as well as $8,000 plus USDT in trading rewards added to your account as trading bonuses for signing up with my referral link down below. This is big stuff here. It's an excellent deal. I reached out to them for partnership. They did not reach out to me. I don't get paid by them. The only thing I get is a referral link. And if you want all those things I just mentioned, which you should, trust me, I've done the scouting of the market, you can use my link down below to sign up. It takes 30 seconds and you'll get those rewards and bonuses, and you'll help out the channel. I appreciate that, guys. Let's get into the content. So just discussing further some of yesterday's events here, the unemployment data came in slightly higher than expected. And we know that historically speaking, with unemployment being shown in blue and the S&P 500 being shown in red here, historically speaking, when unemployment spikes, we generally see bear markets and recessions across the economy. So we see, for example, a spike right here in the 60s, bear market. Spike right here, just following that, bear market. Okay, spike right here, bear market. Spike, nothing happened. There's a few duds, spike, bear market, bear market. Okay, and in 2020, obviously we saw a bear market as well. It was just kind of squashed and patched via massive amounts of printing. So not every single time. There are some duds, especially way back here in the 1950s. But generally speaking, when unemployment increases drastically, we see recessions. We see bear markets across the S&P 500. And obviously under that market environment, it would be very, very difficult for Bitcoin to continue upwards, as of course, the S&P and Bitcoin are both tied to the macro economy. And therefore, they both go downwards if we saw unemployment spike. So although we saw an increase in unemployment, it wasn't a spike. We're still where we were around June last year, around 9 months ago. We're at the same place in unemployment. And we're hoping, for the sake of the cycle, that unemployment can just maintain at this level for just another 6 or 7 months until the end of the cycle, and then spike. It doesn't matter if it spikes then. If it spikes then, that's actually expected. That's what we would expect in a bear market. So unemployment's still holding its ground. Yes, it was a little bit higher than expected, but nothing too drastic, nothing that's really catching my attention at this point. And the White House crypto summit was a non-event. Nothing happened. It was a dud. Nothing new was released, and therefore the price did not move. So now that we've kind of recapped that, we can get into some of the price action. So simplistic Bitcoin chart, just to explain this situation. We've got a triangle here. That triangle is relevant. We've got support lines. In my view, they stem backwards from price cycles. So namely, we have a macro support line on Bitcoin, which is actually broken to the downside now from the 2021 cycle, which very clearly was our macro support zone during this prior price range. If I drew it correctly, you could see it pretty much perfectly, but I've just drawn it roughly now just so you get the point. There's our support, okay? You can say that's a deviation, a fake out. You can say what you will, but the point is, even on the shorter term candles, which if I drew it correctly, I could show you. In fact, I'll try to show you now. We still respected that prior support line. So even on the short term, with just a rough drawing, this line was still respected even within the deviation. Retest before breaking down. We got back above it, retest from the upside. We retested again. We rejected from that exact level on multiple occasions. So this line's still being respected here. So Bitcoin is between a rock and a hard place. On one hand, it's below where it needs to be because it's broken down from its prior macro range, which was basically between here and here. We've broken down there, and now we're hovering just below it in a very dangerous position because we've had very little, as I've mentioned many times on the channel, a very limited amount of historical price action between around 74,000 and 86,000, and hence our predictive capabilities within this price region are very, very low. It's very difficult to give predictions about what might happen here when we have no real data to base those predictions off of. So what I can do is this. I can look into what Bitcoin needs to do and what Bitcoin needs to avoid doing. That's all I can do, and I'll do it today. Now, my answer to what Bitcoin needs to do is the same, but my answer to what Bitcoin needs to avoid doing is slightly different, and it's more contextual now, and we'll explain that in a second. But let's just get in what Bitcoin needs to do. Well, obviously, it needs to break this triangle to the upside, and it needs to get back into its prior macro range. That's step one. But more specifically, it needs to break momentum, okay? We need a momentum shift here. We can get that via a daily chart RSI resistance line breakout. That's one of the things we need to do. And we also need to break above the indicators that led to this breakdown in the first place. So we had, for example, the daily chart Gaussian channel, which very clearly suppressed the Bitcoin price in the last legs of this macro range holding before the breakdown occurred. That center line of the Gaussian channel on the daily chart needs to be broken before Bitcoin can be back in the clear. So in my view, if Bitcoin got above something like 98,000, maybe let's just say 100,000 to keep it clean, we would be back in the clear and everything would be jolly and dandy again. Until then, we are in a dangerous position, and we are in a position in which we're threatening downside breaks. Now, if a downside break occurs, it's not the end of the world, but we need to maintain above certain levels. Here's where we can get into some of the unique analysis. So my textbook go-to support level, which I've discussed before, just one more moment here, is the weekly chart Gaussian channel, right? It's a level that, generally speaking, when we break it, always actually, not generally speaking, every single time since the first halving, when we break into the Gaussian channel, we move through the Gaussian channel. So we broke into it here and we moved through it. We broke into it here, we moved through it. From a direction we break into it, we move through it, and that leads to major macro shifts. Therefore, if Bitcoin was to break into that Gaussian channel again, not only would we be below every single indicator pretty much at that point, as well as be below our macro support of the prior resistance, the prior price range right here, as you can see, at 70 to 74,000, we would also simply move through that Gaussian channel. And by that point, we'd be down in the 50K region and we'd be entering a bear market. So I need Bitcoin, we need Bitcoin in order to maintain the bull market to avoid dropping in to that Gaussian channel, which is currently sitting around 72,000, but let's just say 70,000 to keep it clean cut, because that is the upper range, the upper zone of our prior macro consolidation range right here that lasted for 8 months. So if we break back into that macro range, we're not only confirming this full breakdown with a rounding top formation, we're also breaking into the Gaussian channel, and we're basically breaking every single thing that comes with that. Now, here's why Bitcoin going down to that Gaussian channel is not actually ideal at all. I'm not even talking about entering it, because entering it would be the end, right? But even going near it, right, any lower than we are right now, here's why it's a very, very bad situation for Bitcoin to be in to go lower here. It's to do with the altcoin market, right? Obviously, Bitcoin moves the market. That's fine, sure. But altcoins, Ethereum, Bitunix, all these things are connected to Bitcoin, and sometimes, very often actually, foreshadow Bitcoin price action. It was Ethereum that led the way on the upside in October before Bitcoin did so, for example. Okay, it was Ethereum that has generally marked tops in Bitcoin and cryptocurrency bull markets before Bitcoin even does so. 2017 being the exception and the reverse of that. The point is, even if there is reverse circumstances and reverse examples, they move with each other, right? They foreshadow each other on occasion. If Ethereum's looking very, very good and Bitcoin looks okay, the market looks good in general because Ethereum is bringing that to a net positive. That's how the market works. And right now, Ethereum is on the absolute edge of a cliff. It cannot go lower, right? If it goes lower, it's done, guys. This is a terrible structure on Ethereum, a massive double top formation and retesting a macro support zone that was first formed back here in December 2023 and first tested back at the end of the bear market. We cannot afford to go lower on Ethereum. And I'll tell you right now, we certainly cannot afford to go lower on the total 3 cryptocurrency market cap, which has an ascending support line coming backwards from June 2022, over 2.5 years ago. If we break that, it is annihilation, okay? So here's why I'm concerned right now. I know that in recent weeks, and this is true, and you've seen it definitely if you've been holding altcoins, or if you've had altcoins in your portfolio, or heck, if you've even just looked at CoinMarketCap, you've seen it. Bitcoin goes down 5%, altcoins go down 15%, 20%. Ethereum dumps, right? Even if Bitcoin does a small move to the downside, altcoins get wrecked. That means that the space between where we are right now and the zone that would end the bull market is actually very, very significant for altcoins, even though it's not that significant for Bitcoin. A mere few percent drop on Bitcoin could literally lead to the annihilation of the altcoin market. And at that point, we'd likely see a foreshadowing of Bitcoin's collapse, like we've seen foreshadowings of Bitcoin doing certain things with the altcoin market doing things first before. So for example, if Ethereum breaks down and Bitcoin's still consolidating, you can bet that 9 times out of 10, Bitcoin is going to break down as well, and vice versa. Therefore, if we did see the altcoin market break down, which would be triggered by Bitcoin going just a little bit lower, you can be pretty sure that Bitcoin would do the same in the weeks to come. So we really actually need, although this is the invalidation level, I won't change my mind on that. 70,000, in my view, is kind of the bear market zone. If we break below 70,000, it's very much over in many, many, many ways. There's obviously some nuances there with the cycle, which I've explained before, but I don't want to turn this into a 25-minute video. We'll explain that if it becomes relevant again. Essentially, the crux of it is the cycle is based on dates, not price, and so it's very difficult to actually invalidate the cycle without seeing the date range trend invalidated, which can only happen with time. But let's just keep it simple for the sake of this video. If Bitcoin goes to 70,000, right, it technically is still okay. If it breaks below 70,000, it's completely destroyed, structurally speaking. But if Bitcoin goes to 70,000, the altcoin market is likely not going to be okay. Heck, if Bitcoin goes to 80,000, the altcoin market likely is not going to be okay. And at that point, we'll start to get very concerned that an altcoin market breakdown could be foreshadowing the collapse for Bitcoin. So that's my concern right now. And that's why even though Bitcoin technically does have breathing room, altcoins really don't. So I kind of want to see Bitcoin break to the upside here to just avoid that mess that we could be entering. But of course, the 4-year cycle is based on Bitcoin. Altcoins are kind of an afterthought, and they've just coincidentally followed Bitcoin along because that's how the market moves and that's how money cycle flows in cryptocurrency. So I wouldn't, again, be willing to say that everything's destroyed and it's a bear market if Ethereum broke down. That would only come with a Bitcoin breakdown, but it would not be reassuring. We are on the edge of a cliff. Not quite on Bitcoin yet. Bitcoin still has some breathing room, but I can assure you that altcoins really do not. So perhaps it was a long-winded way of getting to my point there at the end. I apologize for that. I freestyle these videos, but hopefully you found it useful and insightful regardless. Just before we end it off here today, what I mentioned at the start of the video, I'd just like to bring it up again here. It's the Bitunix exchange. If you want an exchange that's never been hacked before, that is global non-KYC, that does not require you to use a VPN to use that exchange. It's a nuisance, it's a hassle, especially for people in the USA. You can use Bitunix, guys. Check it out with my link down below. You'll get a 15% trading fee discount attached to your account for life, as well as up to $8,000 in rewards by signing up with my referral link down below. That's exclusively with my referral link. You get that discount. And that reward, again, never been hacked before, hundreds of trading pairs, low in fees. You can't go wrong. Check it out down below. And I'll mention one more thing, which is my VIP group on Telegram. If you want to trade altcoins on Telegram, you can get 4 altcoin trading signals posted to you directly via Telegram access. Okay, so download the Telegram app if you don't have it. Get on VIP if you're interested in getting those altcoin trading signals. You also get access to a group chat where you can discuss the market with other members of VIP, which is about 160 people. So a sizable community in there. And if you're interested, again, check it out. Thanks for watching, guys. Hope you enjoyed. I'll catch you soon.